Hello, everybody. Welcome to the space.
Hey man, how's it going?
Good, good. How are you?
Oh, I'm doing great. We're having quite a historical day today. I don't know if you've had a chance to look at the swap volume. It's been incredible.
I'll check it out now.
We're approaching a third of $1 billion.
I like it.
Yeah, I think
We've got our full charts.
312 million last I checked, and we have about 3 hours to go. Incredible. Hello, Chad. How you doing?
How's it going, guys?
I am ecstatic, man. I'm having a great day. Hope you are too.
Not too bad, not too bad.
What do you think of all this new volume the protocol's been having today?
Uh, well, in general, I like the idea of new volume. I'm a little bit uh, disheartened of the where it's coming from. I don't think I celebrate, hacks or malicious actors in any way, shape, or form. But um, I think one day we'll get to this kind of number, and it'll be all, or at least the vast majority of it, be just more legitimate funds.
We
At least
we saw that with. That's going to say we saw that with Bitcoin in its early days. Wasn't always used for the best purposes, and then it grew out of it. So I'm thinking maybe it's its Silk Road phase. Um,
Yeah, well, it's a common thing that whenever you have a new technology, just historically speaking, whenever you have a new technology, criminals are the first ones to really utilize it. And that's true with the internet, and that's true with even like Bonnie and Clyde. I think were the first ones to use, like, I think it was like the V3 or the V4 engine, because they would outdrive all the rest of the cars. The police cars weren't as quick. And so what they would do is that they would always rob banks that were near the border to the next state, because at the time police officers couldn't actually pass from state to state. And so there was a debate in Congress. This is like 1920s or 30s, the hell the number was. And there's a debate in Congress whether or not they should make it illegal to make gas tanks of a certain size or greater, because they thought that if we reduce the size of the gas tanks, then Bonnie and Clyde can't really, or similar criminals can't actually, uh, rob a bank and then drive across the border to the next state. Thankfully, they didn't actually end up passing that legislation, but it is true that there is a commonality that whenever you have a new, useful, important piece of technology, it is oftentimes criminals who want to utilize it first, because they're the ones that are most incentivized to adopt new technologies to stay ahead of the curve of uh, officials.
yes, it's true. Of course, Bonnie and Clyde couldn't have, bought some gas tanks and had them in the car. That wouldn't happen. Get around that.
No, that's too hard. That's too hard.
It's silly. Yeah, it's too hard.
I was my main that makes me so happy is I know it's a lot of the funds are not the best, and there's a something criminal happening, but what I got me excited was the stress test upon the network. And it seems like the network is doing really well. Is Would you agree with that, Chad?
I think overall it's doing really well. We haven't had any like significant issues. We had a couple of ETH bugs that kind of showed themselves in the last few days, which we're getting those like patched and worked out. We got into a scenario where we had like over, I think it was 2,100 outbound transactions. Almost all of them, well, at least a vast majority of them, were just like an R bot, and like one R bot had like, I think it was like 1,800 outbound, transactions waiting to be signed. And so I think it does show that there are some improvements and optimizations we can make. And I've got a few ideas in mind, but I haven't even spoken to the devs yet about it, just quite yet, just because we've been focused on other things at the moment. But I have a few ideas how we can actually optimize things and actually speed things up and make them more fluid. But like as we get more traffic and more volume and all these things happen, it's naturally gonna show some kind of cracks in some aspects of THORChain, which is just a natural thing to happen. So we just got to make sure that we're watching for those things, and we find them, make small modifications to make them more efficient and smoother, and carry on. I think one of the big things we got to work on, which I have a few ideas around this, but one of the big things we got to work on is how do we make the lives of our bots more efficient? Because in this particular case, like, they got stretched pretty hard with like the amount of capital required to arb the pools back, and we saw some deviation. I think the biggest that I saw was like a 20% change from the Bitcoin price on THORChain versus the Bitcoin price on like Binance or some other exchange. And that's largely because the arb bots had just so much volume passing through it that they didn't have enough capital to be able to like arb it back, along with the problem of you have to do counting on the inbound transactions when you submit your Bitcoin to be traded. You have to worry about the delayed outbounds. You have to worry about the TSS signing being delayed. With that time period, we had 1,800 transactions on the outbound of a single ARB bot. So like there's all these kind of components that we have to figure out ways of like making ARB bots more powerful. And it's kind of funny because we've never really needed to deal with this, like how do we improve the lives of our bots ever in the life of THORChain's history, just because we had never seen the point where our bots are getting stretched. Like we've gotten so much volume and traffic passing through the network that ARBs themselves are like having a hard time keeping up, which is like I think that's pretty much or close to one of the first times we've really seen this in our history. And so we're going to think long and hard about how do we improve and optimize the job of ARBs to make their much more quick and efficient to be able to cycle their funds, from Bitcoin to ETH and then back to Bitcoin again, back to ETH, back to Bitcoin to ETH, and just like circle that as fast as possible so they can correct prices more efficiently.
I was hearing BTC went to about 30K temporarily on THORChain, and it's the like you mentioned, the outbound delay as well. So ARBs are arbing, but it's just there's so much throughput on the network, and the network, as you know, is literally it's designed only to handle so much outbound, which is dependent on the price. Maybe you want to talk about that a bit more.
About why the delayed outbound, or why the price deviated, or which part of that?
The price deviate is pretty self-explanatory, I think. Why the outbound delay? So I know the network can only process so much outbound, which is priced in Maroon, and that obviously because it's in Maroon, it's set by the price of Maroon. So as the network gets utilized more, the obviously the Maroon price goes up, and then that affects how much output can happen in every block. And once that's full, then it gets scheduled onto another block thereafter. And that's why normal transactions can take a while once in the outbound queue fill up. Does that sound right?
Yeah. I mean, it's kind of multifaceted. The outbound delay itself exists. It was something that we implemented back in the early days of our public beta. Like this is like 2 years ago. And we had a couple exploits, and we implemented this kind of delayed outbound thing so that the community would have time to respond to some sort of, exploit where $15 million is going out the door or something, something crazy or whatever. And that's the reason why it was implemented, just as a safety measure, as a security measure. On top of that, you have to worry about like TSS signing. TSS signing is not always the fastest. It's actually about to get a lot faster because in a couple of churns, we're going to go from 5 Asgard volts to 6 Asgard volts, which means obviously one more Asgard volt, so that's more signing faster. But then also they're going to switch from 20 nodes per 19 or 20 nodes per Asgard to 16, and that doesn't sound like a big difference between those two, but it's I think it's quadratic, or I can't remember if it's exponential or quadratic, but it gets a lot faster even with like one less member in the Asgards. So like that's the second component to it. And one of the ideas that I've been thinking about, and I haven't spoken to the security team or the devs with us quite yet, but just an idea that may or may not happen, but was that that if you wanted to, you could bond up as a swapper. Say you're an Arbot, and you can bond up with some rune that's worth, let's just call it $100,000, some number. And that would, by bonding to your THORChain with $100,000 worth of rune, that would allow the network to skip confirmation counting for your particular transactions with like any transactions that's coming from your THORChain addresses, your Bitcoin address or your Ether address, whatever. And then it would also skip the delayed outbound because we have capital, locked up that we can, acquire in the event that this is being abused or whatever, so we can claw back the value if we need to. And then also, I think it would also, even the TSS signing, it would prioritize these swaps to sign before the regular swaps. And I don't think this will be really utilized by anybody except for our bots or like super high power users of like institutions possibly might use it. But it's just an idea that I've been kind of throwing around as a way to like greatly increase the speed and efficiency of like large volumes of trades passing through the network.
Sounds good.
Sorry,
A bit of
sorry.
background noise there.
On Telegram, I've been inundated with people, especially when we had that massive outbound delay with that one ARB. They were so worried about their funds. I said, and I was showing them the outbound. I was like, listen, it's going to be okay. I had like 6 different private conversations. So if you can speed up the efficiency of the network, I think that's fantastic. And based on what I was seeing in the dev Discord, there seems to be a general sentiment shift from new features to add making things more streamlined and optimizing, and I think that's definitely the right call at this point, seeing that this is a great stress test network. So I'm very excited.
Yeah, technically, like if you did implement this feature theoretically, and let's assume that the ARBs use it, then the delayed outbound would actually be a lot less because a large percentage of the trade volume on the network is our bots. That's always been true, and it will always be true. And so, if you remove their capital from the calculation of how long our like outbound transactions should be delayed, you're probably going to reduce the delayed outbound for even just regular swappers, some level of significance, just because you're no longer including their the outbound value in the calculation of like how long we delay things, because they're getting skipped because they like just bonded up with $100,000 with the rune or $200,000 with the rune or the hell the value is.
Cool. I might take a minute to just step back and introduce everybody as we've gone for a bit. So I'm Chris. Cow's away, not able to make it, so we thought we'll have the space, otherwise we'd miss it, and I know that the community likes it. We've got Chad, obviously lead developer, and then we've got Dennis, which is a THORChain moderator. If you guys want to add anything else to your background, please feel free to do so now.
No, I'm good. I moderate the Telegram. I've been part of this community for 3 years. I absolutely love it, and I'm just excited to be here.
You all know me.
Yeah. So the Q3 report was released yesterday, which is very good. So this is on Medium if anyone hasn't checked it out. So I thought I might use that as a bit of a guide. I ran through, actually I made a video yesterday. I've just got to do the editing, just going through that in a bit more depth. So I thought this is a really good thing to talk about. And one of the things, probably the first up looking at the stats, seeing in Q3 was 114% volume increase. As we're looking at the 24-hour volume, but I think it was more important to get the cumulative volume. And I think a lot of that's to do with streaming swaps, particularly you can see that on the chart, on the Thor charts, once that goes. Just the impact streaming swaps has had on the volume over the quarter. I don't know if it's worth adding any more comments on that.
Well,
it's 140. That's a massive amount compared to Q2, and it might, like, Bitcoin hasn't really done much except go down 2,000 in the quarter. So
yeah, I think
I'm really surprised. It's good.
what was really interesting is that like when we were discussing the concept of streaming swaps like months and months ago, before it was like implemented and stuff, and there was a debate like amongst the devs and such about like, okay, we're gonna reduce the fees effect in some sense, have a more efficient way of utilizing capital, which will inevitably just reduce the cost of trading and such. And that means that the LPs and nodes like might earn like a lower yield, which makes sense. But then like also like because you're expanding the network to allow larger trades of whale trades and this kind of thing, that like you're gonna get more, you're gonna expand the market of what THORChain, the type of person that THORChain can address. And does that increase in market counteract the loss in revenue of the current swappers of the THORChain network like at that time? And that was kind of like a debated topic, and people felt different ways. And myself and Lena kind of felt like there would be a good amount of like new capital and large whales coming into the network because largely because if you look at the trade volume of sexes of like Binance and Coinbase, like this is like $10 billion or something crazy. Like there's so much addressable market to capture, and by beating them out just on pure execution, you might be able to siphon off a good amount of their liquidity in theory. And after we've been like running it for nearly a quarter now, whatever it's half of a quarter or 2/3 of a quarter, whatever it was, the income of the network, that the actual like node system income of the network is like just about the same as it was before we implemented this feature. I think it was like 52% of the rewards of the network was from swaps, and 48 was from block rewards. And now it's at like 48% or something like this, so it's more or less the same. And I think now it's actually, to be fair, now it's actually harder to accomplish that just because the price of Rune today is at $2, whereas when we implemented the feature, the Rune was at like $1.20 or something like this. So that block reward value was worth more now than it was, a couple months ago. And so I think it's like the increase in Rune's price is actually, in terms of this particular metric, has countered it in some ways. But we still, even with all that, we still have enough yield coming in that it's like still high, which is pretty awesome.
When you look at the thought charts for the breakdown of liquidity fees, you can versus block rewards, you can see this decline as well. So it's and I know that's dependent on the size of the reserve. So it's trending well, and I'd expect to see that type of trend to hopefully continue, where the liquidity fees are becoming more and more, at least half of the actual income for the network. But the trend is definitely in the right direction.
Yeah, I'd be curious to see like once we get more wallets integrating with streaming shops like Trust Wallet, for example. Once we get more wallets in general, just more wallets, and like we just got MetaMask, for example, was a new one we just added last month or a few weeks ago, or the number, wherever it was. Like just getting more integrations, that's obviously going to push in that particular direction. So, not to mention the bull market. Once we get the bull market runs, and like obviously just trade just kind of blows up everywhere because that's what happens in bull markets. Like you're going to see the increase in block reward and fees collected to be even more significant. So I think we're definitely trending in the right direction. I'm quite proud that even during a bull market, we're still getting to 50%. It's pretty unheard of in the industry for the most part.
Yeah, absolutely. So those are the key metrics. No, I think when we talk about integration, you can see it was $140,000 worth of affiliates was paid out in the quarter as well, which can go onto any asset, which is really cool because it used to only be Rune. So there's a lot of money on the table for interfaces that build an interface, utilize THORChain, and they can get that affiliate income, which is really good as well. A way to sustain yourself through these times, and I suspect that fee will only go up as time goes on when the market heats up.
Yeah, absolutely.
Lending, any major updates on lending? How are we seeing that? I know we're 46 days in now. Anything worth talking about on lending?
Overall, so far, on lending has performed kind of as expected. We haven't seen it be like this huge blow out of the water kind of feature quite yet. I think that's largely because of two main reasons. One is it's bear market and nobody wants to open or close loans in general, just because there's just not that much interest. and you can see that as also true on like Aave and Compound and more established protocol. Like their volume is relatively quite low. I think that's one thing. The second thing is that I underestimated personally. I underestimated how much the fees were going to be on lending. I thought it would be like more reasonable, but then once you think about more about there being 4 trades to open a loan and 4 trades to close a loan, that's a lot more. It's 4 is a lot bigger than 1 or 2 trades, and so not to mention the virtual pool can become more and more shallow depending on the scenario we're in. So fees actually are playing a bigger role to like not getting in larger loans for the most part. I think the largest loan we've seen so far was I think like 300,000 or something like this that I recall seeing, which was really big, given the state of things. But once we get streaming loans, streaming swap loans or streaming loans, I guess streaming loans makes sense. Once that feature is launched, which it's coming up soon. I think that's going to. Also, I'm hoping that they'll start seeing some like larger participation for like larger whales and that kind of thing to come in and start opening up large Bitcoin loans or something like this, and see much more burning of buying and burning of Rune.
Yeah, cool. 344,000, biggest borrowed amount.
Yeah, without streaming
Big.
loans, that's a pretty massive loan, to be fair.
I'm just looking at the pools. The BTC pool drive depth basis points is 55%. So that's gonna limit the amount of streaming swaps you can do across the pool, right? Compared to if it was at 95%.
Yeah, at 54%, streaming swaps would allow you to do just two sub trades, so it wouldn't be that much. I think that's actually about a 50% reduction in fees in that particular instance, if my mind math is accurate. So it's really not going to be that much, and this is largely because we're seeing all this huge trade volume of the Bitcoin ETH pool from all this trade that we've been seeing. Like we're like 5 days into October, and we've already surpassed $1 billion in trade volume, which is already surpassed the total trade volume of the last month, the previous month, which is just like pretty wacky. So all that trade volume is obviously pushing the virtual pool of the Bitcoin and ETH pools down, which is what it's supposed to do by design. But one of the new features that we got in version 121 that hasn't been flipped on quite yet, and we're waiting on that until this whole chaos kind of calms down some. But one of the features is that we allow the network to dynamically determine on its own algo to determine what is the sensitivity of how much the Bitcoin pool, the ETH pool individually should be, so that it keeps it from to staying more deep, and so you have more less fees and more streams sub swaps within your loan, all that kind of stuff. That'll certainly improve things quite significantly, very significantly, I actually would say. But we're just waiting for all this chaos of this FTX hacker and all the stuff that's going on, and not do anything wacky or crazy in the protocol now when things are already kind of pretty extreme. Just let things calm down first, and then once things kind of simmer down, we can start kind of rolling out these features.
Yeah, that'd be the dynamic max anchor slip calculation. It's featured in the article.
Yep, that's it.
So I do have a question. So for streaming swaps and lending, and savers, they're implemented, they're ready to go. It's just waiting for, I guess, the switch to be flipped, the MIA to be activated. Do you know any idea when that will happen? Is that looking like within the next 7 days or longer?
If I had to guess, I would probably say 7 to 14 days. It really just depends. To me, this is how I'm looking at it. It really just depends on when we get past all this craziness that's happening in the moment. And because I don't want to roll out new features in the middle of something crazy happening. Like volume is super high, and I don't want to roll a new feature that maybe it has some sort of bug or whatever causes problems, whatever. Like you don't want to do that when you're in the middle of all this crazy volume happening. So it just doesn't make sense to do it at this moment. So as soon as that stuff kind of clears out, the next thing to do is to configure the dynamic max anchor, which that should be relatively fast. Like maybe take a day or two to do that. Once that's done, and the virtual pools are relatively accurate for what they should be, which is around 95% relative to the layer one counterparts, then we can enable streaming loans, and then once we have that going, we can go ahead and enable streaming sabers as well.
Which would arguably add a lot more volume into it as well. That's why you need to have that configuration. Otherwise, yeah, you're just adding more volume to the pools, which reduces the the deals lenders are going to get potentially.
Yep, more volume is a good thing in general.
So there's a piece here for Tor accounting. So Tor being the decentralized stablecoin that sits within THORChain as an accounting. You can't get your hands on it. It always has a market cap of 0. And I've seen the talks regarding perhaps making this usable, so people can have it. People can utilize this decentralized stablecoin that has been around for 14 months. It's not something new in any way. It came out in ADR 003. So I wanted to get your thoughts on it today, because obviously this has been a discussion for some time, with regards to using Tor beyond the internal accounting and like the accounting within lending. Do you have any specific thoughts on that? Do you think it's too soon? Do you think it's a possibility? Or what are your thoughts on that?
My personal feeling is that it's too soon. The reason why I say that is because I would like to see the Tor, Oracle, if you want to call it that, kind of perform in reality, perform on mainnet for a good amount of time before we put more weight on it in a sense. With all this kind of craziness we've seen with Rune's price performing relatively well, along with all this arbitrage going through the network, blah blah blah. We saw that the stablecoin pools in general really kind of broke from the layer one, like the market price, the pool price of the layer of the stablecoins broke from the market price pretty well. Multiple coins went up, multiple coins went down. It was just like it was a little bit of a pandemonium in some sense, largely because of this huge guy making this huge trades, and our bot's just not even like being quite ready for this kind of volume. And we saw, like I think BUSD hit like $1.10, or and one hit like 86 cents or something like this at one particular time. And the Tor price overall performed really, really well. It didn't really dislodge all that much. The most that it dislodged was went to $1.04 relative to the other stable coins in the pool. Like that's almost nothing. But then at the same time, we also saw that the depth of the Tor pool just plummeted down to I think it would hit 17% or 18% of the original layer one size. So that kind of proved that the defense mechanisms built into derived assets was performing well. That even in the scenario where we have crazy trade volumes happening to the network, and multiple almost all of the stablecoin pools, layer one pools, they all got into wacky states and dislodged from the market price. Even with all of that happening, the Tor asset still held up pretty darn fucking well, which I was really kind of delighted to see that. So that I just kind of want to see the Tor asset, just how it performs against crazy scenarios like we just saw this past week, and just let it have more time to bake and burn, so that when it does come time that we want to talk about enabling this as a general purpose asset, we can say that, okay, we've been watching it for the last 6 months or a year, or whatever the time span was, and this is what we saw, right? Here's the pros, here's the cons, here's the bugs we saw, here's the patches we made, or whatever it is. So far, we haven't really needed to make any patches or changes or at all. It's really held up strongly on its own 2 feet, which is pretty awesome to see. But I just want to see it kind of prove itself more before we, put more weight on that concept.
Cool. I know that there's been very lengthy threads in Discord, discussions in Discord about how it would perform So it is really good to see it in action under different circumstances because you can talk as much theory as you want, and there's been a lot of concern about will ARBs hold up in certain situations, particularly when ARBs is a dependent, is required in many situations with the THORChain. So it's really good to see it in action and actually getting those hard evidence.
Right, like what I was kind of commenting earlier about, like spending some time in the next few months to try to see what we can do to improve the efficiency of arbing. Like that will all make Tor a safer asset. If arbs can arb more efficiently and more effectively, and even with less capital, that would be a pretty significant improvement, not just for the layer one pools in general, but also that inherently means that it also makes us a good amount of improvement for Tor and the rest of the derived assets.
Sweet. It's going to be adequate now. Even with synthetics, you see anything that can be done more with synthetics? Because obviously they don't have the confirmation time issues. They don't need to go through Bifrost and all that type of stuff. Is there any improvements you can see just with using synthetic assets to speed up ARBs?
I think the synths themselves, like they performed without a hitch. That is not that I know of, at least. Like they were perfect. Like there's absolutely nothing wrong with it with the synths in the last week or two. They perform absolutely perfectly. The problem that I have with synths is that I would like to see, and I started a conversation with this like a few weeks ago with the community as a whole. The problem with synths is that I want to see a failsafe or a circuit breaker on synths, so that in the event that synths go really bad in the wrong direction, that the network has a methodology to protect itself effectively, that doesn't cause some sort of like um, um, what's the term I'm looking for, death spiral like scenario. Like, and so I made a suggestion to the community a little while ago, and there's a hotly debated topic of blah blah blah, and people can argue one direction or the other, but in the end, we need to make some kind of change, and largely because the community saw fit to enable savers for stables, but
Yeah.
savers for stables is really going to add a significant amount of risk to the protocol. Not so much now or even in the next like couple of years, but when we go from a bull market to a bear market in what is it going to be, 4 years or 5 years, whatever the hell the number is going to be, like that could be quite devastating for the protocol. And so we need to make sure we have the correct protections in place to make sure that we handle it appropriately and correctly. So it's not like anything we're like rushing to fix or anything like this, but in the long term, we need to have some sort of like circuit breaker or a fallback so that we can handle that scenario if it ever occurs.
I totally agree. For stables, it makes total sense because obviously the people listening, the stable coin price obviously doesn't move. So it's $1, but then Rune's going to go. Rune went from $20 down to $1, and if you look at the impermanent loss curve, once you're going over 50% reduction, it's not good. So there's going to be impermanent loss against when you're pairing Rune against a stable coin, no matter what, and you need a way to defend it. It's great to get that yield. I think in some of the things you talk about a negative yield when it gets too high, but there needs to be some protection because it's going to happen. There's going to be impermanent loss when you have a volatile asset paired against a stable asset.
Right. So when the synth value stays the same and the Rune value goes down, like in a scenario where we go from bull market to bear market, for example, the more volatile the asset is, the non-Rune asset is, the better it is for the protocol, right? So if you look at the last movement, from bull to bear, the price that Rune made against the stable, against the dollar, was about 20x price change, right? Now for Bitcoin, I think it was about a 6x price change. For Ethereum, I think it was about a 5x price change. And as you get to smaller market cap assets, it kind of gets closer and closer to Rune's movement, which makes logical sense because Rune's market cap is much less than Bitcoin or Ethereum's, and therefore it's going to be naturally a more volatile asset than the Bitcoin or Ethereum. So you're going to have more risk on those assets, and of course, stable coins are stable, so they don't move at all. So that has the greatest amount of risk. So while we saw a 5 or 6x price change for Bitcoin and Ethereum respectively, we saw a 20x price change on stables. So that could be a real problem into the future, which is why once we enabled this feature, that's why I started to talk to the community about, okay, well, if we're going to do this, then we're going to greatly increase the risk to the protocol, and let's make the necessary changes and adjustments to make sure we protect everything. Nothing spirals in any particular direction. So in the end, it's the LPs that are taking on the risk, right? The LPs are taking on that risk. We want to make sure they're well protected.
Yes, I totally agree. It's another. You talked about synthetics without savers, and that's there's risk there, but we can look at that. But I think with stables, yeah, it's not risk. It's not there's some degree of risk. It's pretty certain it's going to happen. That's my thing. So that's why I totally believe there needs to be some protection.
Yeah, I think most of the debate at this point, I don't think anybody's debating against doing something. I think everybody kind of agrees that something needs to be done. And there's a question of what is that something, which is kind of a hotly debated topic. I think it really comes down to two ideas. One is that we do what I suggest, which is just implement a negative yield, meaning that once the synth utilization, exceeds a certain percentage, like goes above. Right now, the synth cap's at 60%, I believe. If it goes to 61%, we start to see a negative interest, which should, remove capital from the savers to the LPs. So we're incentivizing the savers to leave, which is what we want them to do anyway, and we're incentivizing the LPs to stay because we're giving them even more yield than they were getting a moment ago. So that's we want the LPs to stay, and we want the savers to leave, and so this is creating that exact incentive structure that we want to create the behavior we want. The second option is that we just do basically forced ejections, or what we historically called the network Ragnaroks. So once we get to a 61% synth utilization, the network just starts ejecting savers from the network, just basically liquidate you, and not liquidate, that's the wrong word to use. We basically take whatever you have, and we just give it back to you on the layer one, and just cause you to exit the system in one form or another. And so that would work too. But the problem that I have with that is that it only solves half the problem, right? We want one to stay, we want the other one to leave, right? And so it doesn't really create the proper structure to cause one to leave and the other one to stay, right? And in the end, causing forced ejections is also negative because you're reducing the pool value. By doing so, you're causing pools to become more shallow, obviously, because you're forcing people to leave. But in a negative interest system, you're not actually losing capital, right? You're actually not making the pools aren't becoming more shallow. They're actually staying at where they are now. They're actually not getting any shallow at all. In terms of just the negative interest component to that. So it's structurally for the protocol. That is definitely to me, it's clear that that's the better way of going at it. You may argue from a user perspective, they may not like that approach, and that's a perfectly legitimate, position to take and so forth and so on. But it's my prerogative or my interest that what comes first and foremost is keeping the network safe and healthy. That's whatever's best for the protocol comes first over what is best for an individual user of it, or LP or saver or whatever. They are come secondary to what is best for the protocol. At least in my view, that's true.
What about the trends? These things can be temporarily. You can go over to 60%, go up to 62%, and then go back down. If you force eject when conditions become more favorable, obviously those people have to then re-enter, as opposed to having economic incentives to control it. Therefore, I'm kind of half arguing for the negative interest rates to do economic incentives for people to take action, as opposed to just force ejecting them.
Right. And once you eject people, only a percentage of them will come back, later on. Even if you actually look at the number of UTXOs in Bitcoin that are over 10 years, it's a constantly increasing number, right? If you can actually bring up a graph and show it. I don't have it on hand to show everybody, but that's just because oftentimes people just forget. right? People forget they have Bitcoin. People forget they're, an LP in THORChain or a saver or whatever. And so, like, as soon as you force them to leave, they'll probably never come back. Some percentage of them, like, I think it's like, I don't know where's in Bitcoin. I want to say it's like somewhere between like 3 and 4% of the UTXOs on Bitcoin are like over 10 years old or something like this. I can't remember the exact number. I'm just making a rough guess right now. So apologies if I'm horribly far off. But and so, like, there is a certain percentage of people that are engaged in the community that will just never take any action. And if you force an action upon them, they won't come back in later. So it's because of that. One of the many reasons I think it's just better for the protocol to keep them in. I'd rather have their dead capital stay in the network than their dead capital stay in a cold wallet somewhere.
I agree. And there's lots of examples of economic incentives. Incentive pendulum is an example, as opposed to just ejecting people. So I do prefer, personally, I prefer that economic incentives over taking definitive action against people.
Right.
All right. And before I go on to some of the new features, Dennis, is there anything you wanted to jump in and talk to?
No, I've been just listening. I don't really have anything meaningful to contribute. I'm actually learning a lot by what Chad's saying. About the forced ejection, I was wondering if you could do a combination of those two strategies of negative interest or forced ejection, or if it was like tiered, or depending on the severity of the situation, you could implement both strategies. But that's just me brainstorming. I'm not quite sure.
I mean, I would be avoidant to overcomplicate the solution and implement multiple solutions for a single problem. In some ways, you can make the argument that negative interest does do ejection. So it incentivizes people to leave through negative interest rates rather than the network selecting somebody for them. And then, okay, you're the guy, you're the next one to be kicked out. And what the mechanic is to determine who is the next person to be kicked out is you can debate one way or another, and there's not really, there's not really a clear, concise, and obvious choice. Whatever it is would probably be semi-arbitrary to some degree, at least. So I would be hesitant to overcomplicating it. And one of the things I liked about the negative interest rate approach is that it's actually very, very simple and very, very clean. Like, if you wanted to implement this tomorrow, hypothetically, the amount of like code changes required would be like maybe 10, 20 lines. Like, it's like a very clean, very easy, very simple change, and it would just work very well. If you want to do the force ejections, that's a much more complicated. There's a computational aspect to it that would be quite intense, and I don't really know off the top of my head because I haven't really spent the time thinking about it. But like, if even just the idea of like, okay, you've got 10,000 savers in Bitcoin. All right, now we've got to establish which one of these guys do you want to kick out. And you can talk about, okay, let's assume that it's like the last one in is the first one out. Say that's like the algo you want to go to. First in or last in is the first out. And so you have to iterate through like 10,000 records in the database to find the thing that you're looking for, which would be quite expensive in a KB store like this one. So it's just like it's so complicated to build that, and it has like cost to it that most people won't even think about because they're not engineers themselves or actually have to think about the practical implementation of something like this and code it out and build it in a way that doesn't cost the network too much in terms of like compute. But like, doing the negative interest rate is so clean, so simple, very efficient, like just beautiful. It would be a very beautiful solution in terms of like, from an engineering perspective, it would be very beautiful. So I kind of lean that way for a lot of reasons, but that's certainly one of them.
That's a pretty convincing argument. I think the less complexity to the code is good. And someone who's not a dev, that's an insight that I lack. So I appreciate that context. Anything else on the list there, Chris?
If anybody wants to come up and ask a question too, he always opens up to Q&A at the end.
Oh, yeah.
Yeah, I'll do that. I don't think I have anything else for the past. I just wanted to talk about order books and some of the new stuff. From my understanding, that's pretty much, it's very close to being done. Is there a ETA for order books? Are we waiting until streaming swaps is enabled for loans and everything else to be settled? Like, what's the feeling on getting order books in?
So we were focused obviously on lending for a long time, and now that lending's been launched, and I think we've kind of ironed out the major bugs. As I'm sure there's a few more to work on, but I think we've ironed out the major bugs, and we're about to launch streaming loans and all this kind of stuff, streaming savers. I think once we finish that and get that out the door, and everything looks pretty good, we can move on to like features. And the next two major features that I have in mind personally is memoless transactions, which I think will be very useful for a host of reasons. That code is already written. It's not merged yet. It needs to be reviewed and merged and all that kind of stuff and tested and such, so forth and so on. And then there's also needs to be a server, like a backend server that needs to be built, which is like an open source thing that anybody can run. I'll probably be building that, soon afterwards once that gets merged. That's probably the next thing and that's something that I think THORChain Bull wants to utilize that kind of server plus the memoless transactions functionality to build his own UI that's very fast and efficient and clean and simple, and you can use it with any wallet in the world, and everything is just very very simple. That's the next thing. And then after that one would be order books, and order book is already live in the code. It's like it's sitting there, but it's not actually enabled. It's feature flagged off. There are some changes I want to make to it. We have to do some updates to it, some to some of the swap logic, and there is some testing that needs to be done. And I want to implement streaming swaps on order book items so that you can get a better price execution on your limit orders. That's something I want to build, which I don't think that will be very hard. I think it'll be relatively simple. I think. Actually, I think it'd be very simple. Come to think of it, it should be quite easy to do. But we're so close to launching that particular feature in terms of like there's not a whole lot of work to be done, but it's kind of it's on the kind of the shelf for the time being until we get through the memoless transactions first. But there has been a push. All I have to say though, there has been a push by some of the devs, and I think Iridanis and Pluto were prompting this question in the general channel yesterday, I think it was, about whether or not we as devs should look at Q4 as purely just stability, reliability, decentralization, and kind of house cleaning, and nothing too sexy or exciting, in terms of features or whatever, but just focus on just cleaning up the house in one shape or form. I don't personally agree with this mentality myself. I'm kind of a ship it kind of guy. I like to see memoless transactions and the limit orders happen, and I'm willing to delay other things in the interest of the viewpoint of Iridanis and Pluto. So I like to at least see those two things happen over the next month or two, but the rest of it we can spend on reliability and stability and decentralization. And to be honest, we haven't even had a conversation about what entails that. What are the actual items we want to take on to improve these things? I have a few things in mind myself. I would love to see happen. I would love to see us do some more analysis of the key sign and keygen failures and understanding why that's flaky at times.
Yeah.
I'd love to understand that better. I'd love to get into what I call block set, which is a way for the network to be able to make observations on external chains with between 100 to 400 times more efficiency, just to improve things and get things to be faster on the protocol and be able to withstand a much higher volume or throughput without putting much pressure on the protocol. So there's a bunch of things that I have in mind, but I don't know what Iridanis and Pluto have in mind. They might have some things in mind that I haven't even thought of. So I want to have that conversation with them at some point in the near future.
Sweet. All right. Any chance of getting Mumia V2 in, or that's still down the line?
Oh yeah, Mumia V2. Yes. I think that is something that devs are quite intently to get that sooner than later. And we'll go into some more reasons why that is kind of into the future, but not quite today. But yeah, I think that's definitely something we want to do. We want to get rid of the Mimir admin key and move it to purely a node operating system. And part of that is like creating different memirs that have different different thresholds for how many votes are required to make a change. Right now, it's like nodes can only vote like a 2/3 majority to make anything happen. And memory admin is just like, a single key, single vote. And so it's more about like giving nodes like, if you get like 3 or 4 nodes, voting in a certain direction, then we can flip off some operational commands like trading, for example, or a specific chain or whatever it is, but not economic changes like you know like the emission curve, for example, would be we're still require a 2/3 majority, that kind of thing.
Yep. So cool. Bit of work there. So I've got one more item on the list, but if people want to come up and ask questions, just put a invite to speak, and then we'll get that going for when I finish my next one. So I'll talk about something that isn't talked about probably too much, and that's node and node operators and the bonding. So I see you put a tweet out having a look at the max effective bond for Thor nodes. It's been steadily increasing, which is really good. So this is the amount of bond Thor nodes have been putting up. And if I have a look at THORChain.network, I'll just here. You would need to get into the next churn over 959,000 rune, else you will not get in the next churn, which I just find amazing. So I think it's really good because that increases the capacity within the network, that allows more savers to be added to the network as well, reduces the reliance on POL. So I just wonder if you had any chats having a look at some of the node movements. We're now at 94 active node operators. So if you had any additional comments there, Chad.
Well, I mean, I'm happy that bond sizes are actually slowly increasing, and we're getting a lot more nodes. Like it feels like just a few weeks ago, the maximum number of nodes we were going to have in the network was like 91. Between all the standby and active, and you sum it up, I think it was like 91 or 92 or something like this. And so like to see like just a few weeks later, and we're now at a place where I think we can get like 100, 101 or 105, what the hell the number is now, is like pretty great, because it shows that new nodes are coming in, people learning about the protocol, people are taking large positions in Rune and wanting to contribute to the protocol by running nodes. All that's like very, very, very positive. And I think at this point, even without having the additional 10 or 13 nodes that are waiting in standby right now, how the quantity is, like even now, I think we're still at the highest amount of rune bonded in our like network's history, which is pretty awesome to think about. And that's like at the bottom of the bear market, mind you. So it's just like it's pretty impressive that like even and during the bear market, we are hitting like so many all-time high metrics. Obviously, rune price is not one of them, but pretty much almost all of the other ones are all hitting all-time highs at during a bear market, which is super bullish from a principles, from a primitives perspective and a financials perspective. So like when we go bull in the next market, we have so many things aligned positively that just it's going to be, in my opinion, it's going to be crazy.
Yes, we've got 94 node operators, 11 trying to get in, so that's 105 people that could actually get in, or that are eligible. So that is really good to see. And like I said, the average bond is just going up and up and up. I always felt that THORChain's positioning itself for the next bull. So all this work that's coming on, and the first half of the year was probably just a lot of the background stuff, no major announcements. And then this quarter, everything's coming to fruition, and we're starting to see that. And then if we get a couple more features on the roadmap, get them implemented in Q4, then it's just sitting and ready. That's my feeling.
Yeah, absolutely.
So I'm excited.
Absolutely. I mean, we're doing pretty well. Like, and by the way, the max amount of nodes that the network is configured to support at this moment. I mean, it could go higher, but just as an artificial cap on top of it is like 120. So another 15 nodes, which isn't crazy. That may happen over the next few months. Like, we'll have the max cap of the actual protocol itself. We can configure it to increase it to 130 or 150 or 250 or whatever. But still, like it's pretty awesome.
Yeah, it is. That's really cool. But then you get, but then I guess this is where the argument for speed and optimization comes in. You get 120 and was it 20 per Asgard volt? So you're starting to fill that up. So reducing the amount in the Asgard volt would probably be good because it is that quadratic increase. So then you're trying to balance size and speed. Always a lot of fun. Does anyone have any questions that they want to ask?
If I don't mind, I'd like to ask one because I do get that question a lot, Chad, in Telegram. People ask me, and I say, the limit right now is 120. It is something that can increase if we were to hit the 120 threshold. Could you just break that down a little bit better so I can answer it? Like, what would be required to go above the 120? Is that something that's relatively simple, or could you just describe that a little bit more?
So 120, if I understand correctly, I hope that I do. 120 is the default maximum number of validators set in the Cosmos SDK itself. On top of that, we've also have a THORChain layer configuration set and to some number. I can't remember all the numbers. Maybe it's 120 thing, but
it's 120.
Yeah. So I think we have to configure it both in the THORChain layer to allow above 120, and also the Cosmos SDK layer to allow above 120. But we've never actually touched that configuration on the Cosmos SDK before because we never really needed to. I actually don't know offhand how hard or easy that is to change. My assumption is that it's pretty easy and not a big deal and whatever. Worst case scenario, that it would require some kind of hard fork, but that would be pretty extreme. I don't think that's going to be needed, but most likely it'll be fairly simple to change, and we can do it in a single release.
Perfect. Thanks.
In fact, we should probably set the Cosmos SDK configuration to be some arbitrarily large number, just so it's never just out of the equation and we don't have to think about it again. Just set something 300 or something that we probably never actually hit, and we'll just let the THORChain layer kind of control the validators quantity.
Is that something easy to anticipate when you increase the number of nodes? Because I'm assuming that would increase the length of the block time. Is that something you can easily know beforehand before you do it, or what would you say about that?
I think it's hard to know offhand. To be honest, I don't remember the specifics of Tendermint to know the math of how it actually calculates it out. I'm not sure if it's all signing the same thing and rather than rounds of communication between them or whatnot. But I would expect the block times to increase, but I don't think it would be significant unless you get to 150 or 200 before you start to see a very significant increase. I think we'll probably go from 6 seconds to 7 seconds when at 120 or so. Well, my guess we'll stay between 6 and 7 seconds for 120 nodes. We try to go to 200 or 250 or 300, then that's going to be probably a bit higher than that.
We've got 105, so that's pretty cool.
Oh yeah, it's very exciting. Does anyone have any questions? Come on up. This is your moment to ask the Chad Bareford questions. Let's go. This is a great time, guys.
All right, mate. I just approve someone. Go.
Can't hear you.
Hi, can you guys hear me?
Yes,
yeah.
So, Chad, my question was around the 5 million room limit for the loans. for the initial cap. So once the streaming loans are in, my assumption is that the 5 million rune cap is going to be hit like soon enough. What are core devs' thoughts on how to scale lending beyond that?
Yeah, so there's a couple ways of doing it. There's really three ways of doing it, and people can debate which one they like the best. One is that we have I think it's about 60 million rune in a standby reserve that the team has. It's in a multi-sig, and we can, if we burn rune from there, say we burn like 9 million rune from that wallet, that would increase the cap to like another 3 million on top of it. So technically, it's like not it is 5 million on day one, but technically even right now it's not 5 million. It's like 6 million or something like this, or 5.3, I suppose, 5.4. So it does kind of increase itself kind of automatically just because of your burning rune. It kind of increases the cap in some sense. But the first way you can do it is just by burning some rune from the reserve. That's the first option. The second option is that we can change the lending lever, and so we can increase or decrease that number to help kind of decrease the cap. That's the second option. And the third option is that like we can establish a new methodology of how we even cap it at all. I think the methodology we have now was primarily to kind of keep the lending kind of small relative to the amount of rune that we have outstanding, which was about, I think, like 14 million rune outstanding from the kill switch that wasn't rune that was not minted. And so it's kind of leaning on that outstanding rune as its kind of buffer, or its protection in some sense from protecting the rune supply from inflating too much. And so we wanted to focus on that at least on day one, because we wanted to give the protocol some time to prove that it works. The lending protocol prove that it actually works as it behaves, and there's no major issues or whatever, and we can look at the data and see like are our assumptions about market psychology correct, or our assumptions incorrect, right? And we can see that once we actually have the system live. So those are the three different ways of doing it. And if we didn't want to go by the lending lever, we wanted to create a new methodology of how we do capping. My assumption is that I would just go by pool depth, right? It'd be by 10% pool depth, or 30%, or 100%, or 400%, or arbitrarily whatever number you want to set it at that point. But the reason why I kind of like the way it is now is because it's not something that you have to maintain. You can just set the number, and in some sense, it'll just kind of scale itself up and down depending upon the movement of the room price. So hypothetically, let's say you're right, that we launched the streaming loans and we have a bunch of loans come in a relatively short period of time. Hopefully that would actually cause some decent increase in the room price. I would assume that it would. And that would cause the value of rune to increase relative to the assets, like the collateral assets like Bitcoin and ETH, which means that the dollar value of more loans that can be ingested is more, right? And every dollar that's bought and burned from rune, we increase the cap at 33 cents or so in its current configuration. So that might have like kind of an effect that it kind of scales itself to the point where you don't necessarily have to touch it. But I could be wrong about that, and you might have to touch it. And if that's the case, we have a few different options to pick from.
Nice. Any updated thoughts on the perps design, because that could potentially permanently burn some rune and reduce the liability for the loan side. So any updates on that?
Yes. Sorry. Before I go into that question, the fourth option to scaling lending, and it might be a bit surprising, but we were talking earlier about launching Tor as a general purpose asset, right? In Thor BDC and Thor F and whatever. Doing that would actually increase the cap on lending, because when people open up, to hold Tor, they are burning rune. By burning rune, you're increasing the cap on the loans. So it's like the fourth option is actually just launching that feature, right, entirely, and just letting it scale lending that way. Yes. So perp design, the kind of like initial discussion that I've had with Lena around what this would look like is that it would predominantly use the derived assets, which would also scale lending, by the way, but which made me think of that fourth option. So it would use derived assets that people would take to take a leverage position on Bitcoin, or short position or long position or whatever. It would use a squared mentality of liquidations. So, let's just say that your collateral goes to the value of a buck 20, 120%. That might be the point at which it liquidates. In which case, the other side, if you were shorting, goes to the long side, would get 100% of the value, and that extra 20% would go to the protocol. It would, permanently burn Rune from the supply, as that 20% will never ever be minted back. And so it would just use that as doing that. Or the other option is we could we could mint that Rune and just insert it into the reserve and have it just be an income for the reserve, right? And so every time some liquidation event happens, it's actually profitable for the protocol, which is how BitMEX made them. I think they were the first ones to create the idea of perps. I think they were the first ones to do it, and that's how they made fuck tons of money. And they made fuck tons of money. There was 50,000 Bitcoin, something crazy. And then once they got shut down by government, they just used that money for their own legal fees and their own retirement fund, which is pretty crazy. But so that money that they made for the company of BitMEX, for us, we would probably just point it towards THORChain, the protocol itself, and just drive value to the protocol itself. So that's how that would work at a high level. There isn't any plan to do anything unusual or crazy, because usually when we add new features like lending, whatever, there's something unusual, creative, or innovative about it. In this particular case, I don't think we necessarily need anything creative or unusual or innovative. Nothing has come to mind for me personally, or Lena for that matter, around something that's innovative, but not that I'm close to it. But at this time, I think we'll just doing perps by itself, and a pretty straightforward and vanilla version of it, would be pretty significant advancement or significant contribution to the protocol, and I just add a lot of value to the protocol, and then just create more demand center and more room being bought and burnt, and more Bitcoin coming into the network, and Ethereum coming into the network, and swaps and trades and all these things. So it would just create a lot of demand for the protocol. So I think that's still something that I have in mind. I don't know when that's going to happen, to be honest with you, but it's something I definitely like to see happen at some point.
Awesome. Thank you.
No worries.
All right, we've got Michael. Oh, we just request again. Oh yeah, no, go. Go, Michael.
Speaker. Hello, hi. Can you hear me?
Yep.
Yes.
Okay, great. I just want to say how I appreciate what Rune is doing. What a great protocol. My question relates to basically two branches. It seems as though the THORChain protocol is providing a lot of functionality in terms of what it does. But from my understanding of the initial value proposition, it's a decentralized cross-chain swap to swap different coins. And my question is the idea to build a lot of functionality like a bank and then slowly integrate more and more chains, or are chains being integrated at the same time that the increasing level of functionality that the THORChain provides? That's my question. Thank you.
Yeah, I think this is. I look at this as not an either or it's more of an scenario. So we have an ability to do things on this protocol that nobody else in the industry can do, layer one Bitcoin loans, for example. Nobody else can really do that. So there's things that we can do that nobody else can, and to me, it would be a travesty if we just kind of walked away from super valuable and super important services like layer one Bitcoin loans. I think we can do a lot of things. We did savers, we did lending, we did cross-chain swaps, synths, we did bond providers, we've done we got perps kind of downstream, limit orders, we got like lots of things happening, stable coins, like all these things. And so like creating a completely vertical DeFi protocol that basically does all the major things of DeFi and does them exceedingly well, I would argue as well, and do them in a way that no other protocol can do, like doing it where you can apply this to Bitcoin, right? These protocols to Bitcoin, like that is like, to me, that's just like the way that I see it is just like we've just completely destroyed the rest of the DeFi industry. Like, we are just doing things that are far and away better than what everybody else is doing by a fucking mile. And so it's just like we have the ability to do things that nobody else can, and we can do them better than everybody else can. So that's part of the reason why I want to see us do these things. It also obviously like drives more value proposition to the protocol and more demand center for the protocol, and obviously more demand for Rune and more demand for the pools and swaps and trades and LPs and blah blah blah. Like, it just drives more value into the protocol, which obviously is a positive thing in general. The second part of your question about like other chains, and this is kind of a really interesting topic because it's like, and before we had actually really launched THORChain, like way back when, we debated about like, okay, how do we add chains? We're just gonna like add a new chain every month, and then how do we decide which chains to add? And there's this kind of this mentality. And I think initially, our first kind of swing at it was just like, you know what, we're just gonna go, large M cap to smallest M cap kind of mentality, and just like start with Bitcoin, then go to Ethereum, then go to and then any layer one chain out there that's like just like just go by market cap. And I think what I had learned in that the folly of that perspective is that it's really two attributes that come to determine the success of a particular layer one chain integration. One is the market cap of the asset, which is what we were focused on in the beginning, and the second part is how much does this chain, this layer one community, this ecosystem, how much do they want to be integrated, right? Because if you launch an empty to an ecosystem that doesn't want to use it, then you're basically launching to you're basically creating like an empty shopping mall, in a matter of speaking, right? Like, nobody's showing up. And I think like Binance Smart Chain is actually a really good example of this, because we had talked about Binance Smart Chain for such a long time. Many people in the industry, in our community, were saying, "Oh yeah, this would be huge. Like, Binance Smart Chain is massively large, like a huge trade volume. It's like a pancake swap, and and that's not wrong." But like, nobody in Binance Smart Chain world was really even asking for this integration to begin with, right? And so we've launched Binance Smart Chain, and the pool depth is like abysmal, right? It's like nobody's adding liquidity, nobody's trading or swapping. It's just like not the right thing. Conversely, on the opposite side of that spectrum, we added Terra to the blockchain, to our chain like a while back, obviously like a couple of years ago, and like that was hugely successful. Not just because it was a large asset, which it was, to be fair, but because like Do Kwon was about it, the community was all about it. Everybody's talking about it. Like, Do Kwon was going to have like all the wallets of Terra integrate with THORChain directly. Like, there's going to be not just like adding the pool, but like co-marketing, Twitter Spaces, getting their wallets to integrate into THORChain so you can trade in and out more easily. Like, that's really what we need to have. So for me, it's just like in this time span where it's bear market, there's less interest in adding new chains. There's like not less interest in spending the cost for node operators to like run this new infrastructure, whatever coin this is going to be. And so like, unless we have more like pull from other communities, like Solana, for example, like if Anatoly from Solana, who runs the thing, and the rest of the community were like dying for THORChain integration, then like I would totally get on the bandwagon and integrate Solana. Despite how I personally feel about Solana, whether I even hold tokens or not, like how I feel about the chain, it matters almost zero. What matters most is just like, does that chain have economic activity, and does that chain want to be integrated, right? And for right now, there's nobody really asking to be integrated, with the exception of maybe Dash and the exception of like Radix, right? And so that's how I feel about it. but people are welcome to disagree with me or argue on that.
That's what I add. When you look at this last fancy chart, cumulative liquidity fees by chain. So this is what chains are producing the income, and the top three, and they're really by far first one in order is BNB or Beacon Chain. It kind of makes sense. It's the first one. Sorry, first one is Ethereum, then it's BNB, and then Bitcoin, and then everything else, all the other chains, is just like way down the bottom. There's a big disparity between the top three and the rest. So that's, you can see then the utilization of those chains. BSC's just started, but it really hasn't got the same launch as Terra. You can see Terra is on this chart as well. So you want to make sure that it's going to be profitable, it's going to be utilized within THORChain. Otherwise, what's the point of it being added? And really, there's top three that are producing the majority of the income for the network, and then the rest are, I guess, roughage around the sides. So I think that's the argument of, well, are people going to use it? Otherwise, you just created a solution that perhaps no one needs.
Yeah, I think if we integrated with, take Gaia for example, right, which is not really getting a huge amount of volume. Like, it's not because Gaia sucks or something like this. It's not because nobody likes Gaia or Atom Token. It's just because like that community is just not part of the THORChain community. And so, if we were to get, like, hypothetically get Kepler, or one of the wallets or a couple of the wallets to integrate with THORChain directly. And there's been some conversations with, like, with Sunny from Osmosis and other teams within the Cosmos world about like integrating and having like Bitcoin trades and all this kind of stuff. Like, that's really what it is. It's like, it's not so much if you build it, they will come scenario. You have to, like, okay, launching is the first step. Now you have to like do the long and arduous work of integrating that community with your community, with the THORChain community. And like, that's the part that we kind of like just drop on the floor, is we do the first part, we integrate with Binance Smart Chain, and then like nothing else happens. Maybe we integrate with Pancake Swap, for DEX aggregation and that kind of stuff. But like, we don't have the appropriate like team. We don't have like to really kind of like expand beyond that point and like really push there. But I think eventually at some point, like as THORChain becomes more and more big as a protocol and more commonly used, and kind of like more in the mindset of the industry as a whole, then it's a problem that will just naturally solve itself, to be honest with you. But we're just not there.
I feel the argument for BSC was that Trust Wallet hopefully be able to add a lot of volume to it, and it could potentially replace BNB or Beacon. But then again, like, there's a bit of time before that might happen. There's a lot of argument with BSC, and you can do good DEX integration on that as well.
Yeah, that's true. I mean, at some point we're probably going to have to get rid of the Beacon chain, because like at some point it's probably going to like die. Like, Binance as a company is really moving away from the Beacon chain, and they're staying focused on Binance Smart Chain. That seems to be where they think their future is, right? So at some point we're probably going to have to drop BNB, and just focus on BSC. But right now it's like it's generating so much yield and so much income for the protocol. It makes no sense to remove it right now. Even with BUSD, is going to be like dropped entirely. I think in February or something like this, whatever it held in a few months. But like, to this day, it's still like a huge income for the protocol.
Reminder: check all your wallets for BUSD and get rid of it.
Yeah, if you got any BUSD sitting in a wallet somewhere, just go ahead and sell that on THORChain.
Yeah, on THORChain. Becoming an LP before now. Anyway, so if there's anyone that else wants to speak, just request. I did have a question because it was put on Twitter. So there's been some issues affecting wallets with regards to the endpoints and stuff. Like, THORSwap is down for maintenance. And I know the 9 realms core endpoints are severely rate limited. do you have? Well, I guess it's set in the context that there's been an actor or a bunch of actors that have hit the endpoints, which is what's a lot of a lot of the interfaces used to either quote to give you the information on a swap, or to get you information, get your wallet history, get your transaction or swap history, to get metrics and stuff like that. This all comes from THORChain to certain endpoints, and someone's been hitting them a lot, and it's been difficult to separate dummy requests from actual requests, which starts to slow down the server, which is having an impact on AsgardX, it's having an impact on THORSwap that run their own infrastructure as well, and as well as other wallets. I really want to expand on that, Chad, and do you know what's happening, what Nine Realms is looking to do to implement API keys or anything like that in order to try and get around this?
So I mean, I haven't really been actively engaged in all this happening on the Nine Realms side. I've been engaged in other things, but in general, like DOS is like a common thing in just like in Web 2, right? It's like you see it all the time. Like GitHub gets DOS all the time, right? For example, like this is not an unusual thing, and to anybody who's involved with like internet security or whatever, that like DOS happens. It's just a frequent thing that just it's annoyance, and it sucks because it just puts a drain on our resources as a team. Like Nine Realms has to spend a bunch of time to to increase rate limits or put things behind like I think Cloudflare or whatever, and it's just a drain on resources, and it's just annoying as fuck. But like my viewpoint in general, and I think what I've been talking and we've been talking in general is that we don't want to be long term, or Nine Realms doesn't want to be long term like runners of infrastructure for the industry as a whole. I think like we want to do that for some cases, like in the Trust Wallet case, we want to run infrastructure because to make it easier for them to spin up and become integrating with us and not have to have them go through extra kind of hoops to jump through. But we can run a Thor node for like Trust Wallet, on a different domain, right, on a different server, and not to worry about being DOS as much, although it's still obviously possible through like Wiresharks and shit like this. But long term, like what I wish people would realize, and I think we haven't really quite figured this out in the space yet, is that the idea of a DOS to me is really a Web 2 concept. And that DOS doesn't really exist in the Web 3 ID world. That's why every time you make a transaction on Bitcoin, it has a cost associated with it. That's why like DOS don't really if I wanted to DOS Nine Realms tonight, I could go home and just go ahead and DOS them. The amount of money that it cost me to do so is like really not that much, right? But if I wanted to go home and like just DOS the fuck out of Bitcoin, it would be super fucking expensive, right? It would just be hugely bad for me as the attacker in the scenario. So long term, what the industry has to come to realize is that Web 3 is not Web 2, and we cannot look at Web 3 like we look at Web 2. And so when you use the internet today on Web 2, like we're on Twitter right now, and this whole system is free, and we're tweeting for free, we're on Spaces for free, and all these things, that's the case because somebody else is paying the bill, which is like the Twitter VCs and all this kind of stuff in this particular case. In Web 3, nobody else pays for your shit. You pay for your shit. You will make a transaction on Bitcoin to send some BTC to some BC1 address. You pay for it, not Bitcoin, not Eric Voorhees doesn't pay for it for you. Like nobody pays for your shit except for you, and that's how Web3 works: is you pay for what you use, right? And so, like, what my other project that I started working on, Archeo, is kind of gearing towards doing is to create the Web3 infrastructure for connecting to blockchains and running UIs in a way that users pay for what they're using, rather than some team like THORSwap, for example, runs their servers, they pay for it, they have all these they have to figure out revenue models and blah blah blah, and they have to figure out like how they can become profitable, how they pay salaries and all these things, and they do that through fees or whatever, or investments or ads or like whatever mechanism people want to use. That is the Web 2 way of like solving these problems. The Web 3 is everybody pays for what they use, and everything's just more or less works as it is with the correct incentives and so forth and so on. And so what Archeo is planning to do is to create the entire structure for what we now use Web 2 for in crypto. We are now going to create the Web 3 rails of the equivalent we now see in Web 2 in the crypto space. So we can completely abandon the Web 2 mentality, the Web 2 infrastructure, the Web 2 servers, and completely abandon Web 2 within the context of running Web 3 services, Web 3 platforms and protocols and so forth and so on. So it sucks that Nine Realms is going through all this DOS bullshit, and it's really annoying and it's frustrating and just burning resources and time, and I feel bad for Pluto and Ursa and all the different people that are currently working on this. It just sucks. It's just I wish they didn't have to deal with this shit, but apparently we do, because that's the situation we're in today. But my feeling is that long term is that Nine Realms does not run infrastructure for the entire industry. Nine Realms does not run infrastructure at all, other than what they're being paid to do. Right? No more free services. That's the only reason why this stuff works, is because it's free. This doesn't like the DOS works, is because it's free.
That's why you see a lot of explorers that we use requiring API keys. We, as Gardex, just moved to a block cipher, $130 a month API key, just so we could, actually get Bitcoin data. What's for THORChain? We thought about this as well. And I did have a question. What's the workaround? Can you run a trimmed, lighter version of a node in order to get the information and do queries? Could you run that? We thought about running a node, but a node's not an easy or inexpensive task. But are there light node equivalents, as in like a trimmed node instead of running a full validator?
So running a full validator is different than running a full node. A full node is just like running a copy of the THORChain database, right? And running the full validator requires running a copy of every blockchain, which is obviously significantly more expensive and complex. But if you just want to run the Nine Realms, Thor nodes, which is which is being DOS today, you can run it yourself, run a full node yourself, right? And you could even enable pruning, so that you you don't maintain history. You just keep the last 1,000 blocks or 100 blocks or something. You don't need if you don't need to query what happened last week, then you can go ahead and just prune that data and just keep keep a copy of the data which is up to the tip, which that data is not very much data at all, to be honest with you. So just if you want to run a very simple and clean and easy full node, you can do that with very little resources. You don't need a lot to do that. And it's part of what we want to do is we want to convince anybody that's actually consuming the Nine Realms Thor node, data, to just run your own server, right, and just centralize it, rather than everybody just using Nine Realms free service. THORSwap runs their own infrastructure, and THORWallet runs their own infrastructure, and everybody just runs their own independent stuff, and they're just independent of everybody else, and you can't DOS the entire one server and take down a bunch of different services or whatever. That's what we need to get to in the long term. In the short term, we have to just kind of deal with the situation we're in, but in the long term, we have to get to a much better place, which I think we are. And I think Nine Realms knows this, and I think they're heading in that direction.
I think for an interface, you could probably do that, a trimmed one, and then if you had the Midgard DB, then you pretty much got everything you need, because everything else is reliant on an external block explorer.
Correct.
I'm looking into that. And just see if anyone else got questions. Got no more requests to speak. Hopefully THORSwap do get recovered, and this is where affiliate fees is important. Everyone wants a free wallet. I used to love Gardex when it was free, but there has to be a process to become independent. So interfaces, like I said, need to become independent in order to not be reliant on THORChain or anyone else. They can just self-serve. Well, THORChain front ends. You know what I'm saying?
Yeah.
So we need speaker Sheldon. Go fire away.
Can you hear me? I had some audio problems for a second there. on my end?
Yep.
Oh, hi. Um, I'll just keep it really short because I'm exhausted. Um, you guys going to be at Cosmoverse next year? You were talked about
I'd
a
love
lot.
to be. I was gonna go, and actually, I was slated to go this year, but then some personal things came up that I had to kind of deal with. But I would love to go.
Well, you were missed. Hope you'll be around next year. Yeah, that's
Gotta
it.
get some
Just
junkets to America.
really short. Oh, sorry.
I, I don't live in America. I live in Australia, so I have to book some junkets, some work trips, do some conferences, get some tax write-off. But perhaps not this year.
All good. I flew in from Kuala Lumpur. I've been living in your neighborhood this year, but yeah, there was some you know drama as always there is in Cosmos. But yeah, Thor was cited quite a bit. So hope to see you around.
That's kind of funny because I always felt like within the cosmos like ecosystem that like THORChain is kind of like some sort of black sheep. And it feels really funny and weird to me personally, just because like we are like one of the oldest and one of the biggest, one of the longest running, and one of the most successful Cosmos chains ever. And for some reason, it just feels like we're always excluded from the conversation of the Cosmos world. And I really don't understand why that is.
For
Yeah,
me, as we talked about, sorry, go on, go on.
no, I was just going to say, I mean, the politics don't shrink at all, but some people having a really scope of limited vision, thinking that they need to only prioritize the next delicious looking opportunity for whatever ICS is going to get implemented, or whatever weird DeFi opportunity is going to pop up. There's some retail market grade motivations there, but when I say everybody, I guess I'm adding the in brackets with a brain.
Yeah, that's I always like. I guess it's just because we don't do IBC. We don't have a bridge that we rely on in that way, and people dislike us because we don't have IBC and we're not full Cosmos chain, quote unquote, or something. I don't really know, but it's just kind of funny because like we've been around for such a long time, and like and IBC is relatively new. Like we've been around for years before IBC even was launched or even discussed, right? Even so just like it's like I don't know. It feels so weird to me. I just don't get it.
I had a thought as we talked about this board, Chad, that THORChain is we try to be ecosystem independent. Like you've got the BSC, you've got Ethereum land, the EVM stuff, you've got Cosmos, you've got all these little ecosystems. And THORChain, whilst in a way kind of comes from the Cosmos ecosystem, is always try to be ecosystem independent, because that's what we're trying to do. Is we're trying to connect ecosystems. We're trying to allow you to go from BDC to Cosmos land to Ethereum land and stuff like that. Is a way to maneuver in like a hub spoke fashion. Do you feel that independence is something that sets us apart, or it's just that perhaps some people don't like what we're doing because we don't fit a certain mold?
I think it definitely it both helps and hurts us because like imagine for example that you're at lunch in high school and they get the table of the dorks, you get the table of jocks, and the table of I don't know, so you did different cliques within your high school cafeteria. And for us, like we don't really exist and we don't exist in any of those tables, and we exist in all of those tables at the same time, and we don't get the advancements, not the advancements, but the benefits of a community that already exists, a vibrant community that already exists that we can pull upon to grow our own community and our token from, like, we don't have that in the same way that other projects do. And so, like, for example, like, if you were to launch a new AMM today on Ethereum, you're starting off in an easier place than what we did, because you already have an ETH community and there's ETH maxis, and you can talk about what you're going to do for Ethereum, and these ETH maxis are going to get excited about it, blah blah blah. And it's just like they like what you're doing because you're kind of feeding into what they love. But for some reason, like, people don't necessarily make the connection that we're feeding into the ETH matches don't really like us in some sense, and the Bitcoin matches don't really like us for some reason. Like, even though what we're doing is contributing to them, they don't really have the same correlation. That's probably because we're telling ETH maxis that, well, we're bringing, so you can get in and out of Bitcoin from Ethereum. They're like, well, I don't like Bitcoin. I'm an ETH maxi, and the same thing for Bitcoiners, Bitcoin maxis. And so, like, because you're not fully feeding into their tribe, and you're talking to two different tribes at once, kind of splitting your presence, like, you don't get the same reaction as if you were like a pure ETH play, right? And I think that's like one of the challenges that we uniquely have to deal with in this community that other communities do not. And we're one of the very few communities in the world that have that kind of challenge. So building our validators, building our token value, building our community, like, all these things, in my mind, are actually more difficult in our case than it is to build some new, Cosmos chain or some new ETH project or whatever.
I would agree, and I think your tribalism analogy is really good. And maybe it's just needs the right mindset from a few people. I sat at 5 different lunch tables, probably goth theater, jock band, and agri-science. Anyway, weird school. But yeah, nothing about me personally. That's good enough. Thanks so much for entertaining the question. I can put a cork in it there.
We're the
I,
misfits.
I get that impression a lot from people who wander into the Telegram. The IBC convention thing, I've heard that many, many, many times, and it's that they come in exasperated, like, why haven't you done it? And then we have resources that show, like, listen, this is more complicated and nuanced. There's reasons why it could work, and but it just doesn't really function the way we're set up as THORChain. And it's really weird because we're literally trying to economically liberate the world here. I know that sounds over the top, but it's true. The point that we connect all ecosystems to each other, we allow these liquidity connections in between, that just makes everything better. Everything better about the space. It improves the freedom, and it literally accomplishes the goal that we sought out to do. So the lack of excitement that when you tell people that you can swap layer 1 for layer 1, this blows my mind. And I've been in this community for a while now. I mean, the things that we have done, I mean, real layer 1 yield on Bitcoin, ETH, Litecoin, Doge, whatever. I go to these communities on Twitter and I say, guys, did you know if you've got 3 million Doge, put it in the Savers module and you're earning yield, you retain custody, no KYC, decentralized. And it's like, where are you at? Where are all these people at? It's mind-numbing to me. I don't understand. But one thing I will say on the more positive note is, especially today, I'm exhausted because I've been talking with people all day, both in DMs and Telegram. There's excitement out there, and I think we are growing steadily. It's illogical from my perspective that we're not explosively growing, but it is what it is.
I'm sorry, you actually uncorked a different question, just a short one. Doge is 10,000 units per block, which I believe is minute. Is there a calculator I could look at for estimations of what that would be like? Because I don't hold Doge. It doesn't make sense to me now. It will in a few years, I think. But do you guys have any tools like that I could direct people to convince them? Because I have not been giving you guys the love you deserve recently. I've been overwhelmed with other stuff. I have to stay active on governance and near Polkadot and Cosmos. It would be awesome if there was some calculators for that sort of thing.
Yeah, go ahead and DM me. I'll hook you up. I got all that stuff readily available. So when the space is over, I'll give you whatever you need. I have all that stuff on speed dial for you, buddy.
Awesome. Thank you so much.
Is there any other questions or anything like that?
We had work related, but they seem to have dropped off. If any questions, do a request to speak.
Well, if there's no one else, is this a good cutoff point?
What's the time? Yeah, we can do that. It's nearly 2 hours. So, oh, wait. Here we go. Work related. Go. No. Go.
What are the chances of having a smaller rune amount allocated for to be a delegator? Like at the moment, it's like 50,000 or higher. Is there any chance for a smaller cap?
So there's no cap for a delegator. The cap that's being placed is based on the individual who's running the node itself. So they're setting their own individual cap. So the protocol itself, it has no actual limitation on this.
Assume that answers your question. Okay. Well, is there anyone else who has any questions or anything before we wrap up?
So I assume that relates to a pooled validator. And yeah, my understanding, like what Chad said, there's no cap. I've seen people put in, you can put in like 500 rune to add to a node operator as a pooled validator. So there's no real cap, or there's no minimum amounts except for what the person says. They may say, oh well, look, I'm looking for people that have over 50,000 rune in order to add. Maybe they don't have as much, or some people that have got huge amounts, but they just want a little bit of a top up to try and get into the next year after the bond wars have started. So it really depends on who you're working with. Will depend on whatever limits they may impose.
There has been talk, although nothing concrete quite yet, but there's been talk and debates about the idea of like having an auto bond system where you could put in some arbitrary amount of rune and then the network will bond it for you on various nodes, like autonomously, even if you have 10 rune or something like this. The devil's in the details when it comes to these kind of things. Is we've always avoided doing delegated proof of stake for a whole host of reasons. But that is something we have discussed like kind of on and off the last few months, but it hasn't really been like in the forefront because we've been focusing on, lending and things that are probably more important. But it is theoretically possible to do it, and I am warming up to it somewhat, but implementation details are actually quite important on this particular thing to make sure that it's done in a way that doesn't counteract security on the network.
Yeah, there was a change. There's a really good change. Also detailed in the article about splitting multi-node operators in different Asgard vaults in order to reduce, the possibility of capture of an Asgard vault as well. So, they're the type of considerations I feel we'd have with regards to, equipping, one actor with huge amounts of bond across multiple nodes.
Right. That was actually, in some sense, like if you wanted to go to the auto bond like pathway, so say you wanted to arrive there, that change was probably the first change in a series of like 4 or 5 or 6 changes that would be required to happen to get to that place where you could end up in that place you wanted to get to. And so the first step would be to, if you run multiple nodes, you can inform the network that you're one person running multiple nodes by having the same node operator address. And the network will just like make sure all your nodes are spread out. Like you're not running all your nodes are in one Asgard, they're spread across multiple Asgards, which means your ability to, civil attack the network or civil attack a specific Asgard vault is like, basically pretty impractical. Second component to that notion is that like applying that if you want to be a bond provider on somebody else's node, that operator must be a multi-node operator instead of being like a single node operator. And the reason why that's important is because people who, if you are a malicious actor and you wanted to get 12 nodes so you can take over one of the Asgard vaults, well, you would want all 12 of your nodes to be in one Asgard, obviously, right? You don't want them spread out because then you wouldn't be able to attack, right? So by telling the network that you're running multiple nodes, your nodes are naturally going to be split across multiple Asgards, counter to what you're trying to accomplish, which is trying to attack the network. So by allowing bond providers to exist in multi-node environments but not single-node environments, you make the probability or the possibility of somebody cyber attacking an Asgard like significantly more difficult to accomplish, right? So and there's other changes to be made as well, but that's kind of like one of the ideas being kind of passed around in some sense. That even on the Autobahn side, like the Autobahn would only be deployed to nodes that are multi-node environments, not single-node environments. Or if you did actually deploy to a single-node environment as a bond provider, you wouldn't make any yield. That's probably how it actually would work in reality. But I think that's something we can talk about downstream. It's less needed now because this was a bigger deal like a few months ago when security was relatively low and we're trying to find more bond on the security side. We were talking about cold vaults and all this kind of stuff a little while ago. There's a lot of that talk kind of flew by the wayside just because we don't need it. That's a problem we need to solve anymore so much right now, at least. So it's not really an important issue to take on at this moment in time, but it was a few months ago. But we can keep it on the docket, and maybe we can revisit it, some point in the future.
Sweet. I see Pluto's in the chat, so I've invited him to speak. I'm not sure if he's seen the invitation. If anyone have any other questions, I will make a shameless plug for AsgardX. A new release was released a couple of days ago that has significant improvements. It's a lot lighter, it's a lot faster. So look at AsgardX under the new repository for 1.20.5, which is really good. Low affiliate fee, which really just goes to paying for some devs as well as the API key. Check it out, AsgardX. I'll do a video on it soon.
Awesome. Good chat.
Good chat.
Yes, absolutely. Appreciate it. Awesome.
Oh, thanks everybody. Enjoy the rest of your day, evening, morning, whatever it is for you. And we'll catch you next time.
Okay, guys. Later.
Take care, folks.
Thanks, everyone.